Hello everyone, thanks for taking time out of your Wednesday to join us, and welcome to the Specialist Trading educational presentation of You're More Likely to Become a Consistent Trader if you trade this strategy. Now, I get asked so many times by new and older students as well, and traders around the world, and always say, Steve, why do you always focus on consistency? In other words, why don't you just give us a list of the best stocks or futures to buy or sell and tell us what to do? Well, think of it. Is that the way you make your own trading decisions? Do you rely on someone spitting out orders for you or some system that just automatically generates buy and sell signals? Or do you wait for the earnings to come out before you make a decision, or wait for the jobless claims or any other report you see on TV? You see, this is the way the industry is based off of you waiting for someone or something else to tell you how to trade. Think of it. Almost every system automatically generates signals for you so that you don't have to do anything. If you watch the TV gurus on TV every night, they're telling you what they like or what they don't like. But if this works so well, why is it estimated that 85% of all traders fail? Well, it's because it really doesn't work well. So what really works is what I was taught some 40 years ago, and these consistent methods that have stood the test of time. You see, consistent methods, strategies, techniques, and different tools to use will help sustain you so that you can be trading 10, 20, 30, 40 years down the road. And these fly-by-night ways of trading will maybe generate a couple of really good winners, but ultimately and most likely you'll give it all back. Look at your own trading. Is it anywhere where you'd like it to be? Now, most traders who go out on the road of being taught how to be a consistent trader, have clear intentions of what they want to do. Unfortunately, we're all taught these worn out traditional methods that are supposed to have consistency, but really have no levels of consistency. Take it from someone who was trading these same things that most likely you're using today, and I was using them 40 years ago when I first started trading. For example, let's look at this chart here in VLO. This was coming into the beginning of the month in October. Now, once again, someone could look at this and say, well, Steve, this is a range market. We've always been taught that range markets are where you get whipsawed. You usually sell at the bottom and then it goes up, and then you buy here and then it goes back down. So it's a market that you most likely don't want to do anything with. It's not giving you any clear cut signals as to which direction you want to go. Wait till it breaks out before you decide to do anything. Wait for it to tell you what to do. Okay, well, you want to stay away from that. Now, still a more advanced trader may say, well, actually, that candlestick course I took is actually generating a bearish engulfing pattern. That's very negative. So even though we may be in a range market right now, a whipsaw market, most likely it's going to break to the downside. So if you're just a very average trader, you may say, you know what, I'm just going to stay away from this. Or if you're more advanced and more aggressive, you may say, you know what, I'm going to short this. This is the way most traders trade, and this is what usually happens, as you can see, right? Look familiar to anybody? Well, with the two rules I'm going to share with you to the strategy I'm going to be teaching you later today, it actually would have generated a buy signal where someone thought we were in a range market. And if you missed that, it actually generated not one, but two more, giving you two more chances to get in for a 17-point gain in the next 3 weeks that potentially you could have captured. Now, the two rules I'm going to be sharing with you today also generate signals to the downside. For example, let's look at this chart here in GIL. Once again, here's how most traders trade, myself included. So I'm not just being some arrogant teacher up here telling you what you're doing wrong. I traded this way roughly 4 decades ago, okay? I used to trade off support and resistance. I was always taught, these major support levels are where you want to buy. And someone looking at this would say, Steve, this is major support. I took that big course where they teach you about what the institutions are doing and all the support and resistance. And there's major support from the institutions. This is also major Fibonacci support. So I want to be a buyer of this. And so that you can actually increase your odds for consistency, guess what? We have a bullish engulfing pattern. So these are very clear-cut signs that this stock wants to go up. So let's say you jump in and buy, and then this happens, okay? Now, obviously, some news came out, maybe the earnings, maybe something bad about the company. I don't know, because I don't follow news events. But obviously, something caused this to gap down. So people would say, well, yeah, Steve, sure. No one ever knows what's going to happen in the news, and they're right. No one ever really does know. But once again, the two rules I'm going to be sharing with you today actually would have been the beginning of a sell signal that could have given you 12 points to the downside in 3 weeks, potentially, if you wanted to take that. Now, on top of that, if you miss that initial sell signal that was at the end of September, beginning of October, this strategy generated not only one more, but 2 more. In fact, the last one was 3 days prior to that big drop in the stock market. So this is what I'm trying to tell you. Most traders are unsuccessful because you're waiting for someone to tell you what to do. And then when you do decide to trade off of so-called sound fundamental ideas that have stood the test of time, there's really no consistency in them. Well, I'm going to share with you 2 of the rules to one of our most consistent strategies. And in our courses, we teach you all the rules. We teach you exactly what to look for so that you can decide for yourself whether a valid signal has been generated. But on top of that, we also have our PTS Primo Charting Platform that helps you learn along the way. It's the educational platform you've been searching for because it really teaches you how to trade these strategies. So this is going to be a strong educational presentation today, if you haven't noticed that by now. Welcome once again. My name is Stephen Primo, President and Founder of Specialist Trading. 10 years ago, I teamed up with Pro Trader Strategies with our only goal of being to teach traders how to trade. That's our only goal. We don't want to tell you that we have some system that never fails or we have some master indicator that has never lost. We don't believe in that. What we really want to do is educate you so that you can make your own trading decisions. The reason why I say that is because 42 years ago when I first started trading, I was on the floor of the Pacific Stock Exchange and I struggled just like everyone else. I was doing the same exact things, support and resistance, candlesticks, looking at earnings reports, waiting for all the trading gurus to tell me what to do, and nothing worked. All right, I was on the floor for 16 years. 9 of those years, I was a specialist. If you're wondering what a specialist is someone who makes markets, who actually had to buy and sell from the brokers on the floor. So I made markets during the crash of '87 and the bull market that followed. I traded straight up, straight down markets, and any system or technique you can think of, I've already traded. It's just been rebranded or renamed. So in my 42 years of experience in trading, I know what works in terms of consistency and I know what doesn't. So this is what we do. We teach you all of these consistent methods so that ultimately you can make your own trading decisions. In my opinion, this is the only way one can become a consistent trader. And guess what? We're here to help you become a consistent trader. And you'll see with all the attention and the detail we give today to actually educating you with these 2 rules. Now, I'm going to share with you these 2 rules. You're going to see how simple they are and how powerful they are. But before we begin, we ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these particular rules along with the strategy. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Now, once again, we will also want to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there. Feel free to copy that down. That's where you can find us on Twitter. I post different educational information on a daily basis. Sometimes we post signals that our strategies have generated to show you how consistent they are. Other times we just share little bits of educational wisdom like financial wisdom and trading education. So lots of great information. Please feel free to follow us on Twitter. Now remember, as I stated, we're a little bit different from other webinars you may have attended in that our only focus is simply on educating you. We're not here to tell you what to buy as soon as this presentation concludes. We're not here to tell you what the perfect time frame is. If you're here to find out those things, you've come to the wrong place. We don't believe in that, and that goes entirely against our philosophy. Our philosophy is simply to educate you. My goal is to teach you how to trade with a specialist edge. This is the same edge that was taught to me when I was struggling. I had a couple of mentors who were specialists themselves who taught me these same things. And I truly believe these are the things that have sustained me now going on 42 years, 43 starting in January. So hopefully we'll be able to teach you the same things that have sustained me, and they'll be able to sustain your longevity as a trader as well. Now, one of the first things my mentors taught me is what I want to share with you today. And because we focus so much on consistency, they taught me that consistency is rooted in simplicity. You see, most traders think that the most complicated things are actually the most valid. And in all actuality, it's the exact opposite. Here's the bit of financial wisdom I want to share with you today, what my mentors taught me some 4 decades ago. They said, Steve, it is the easiest thing in the world to overcomplicate your trading, but it is the most difficult thing in the world to simplify your trading. So this is the mindset you have to get into. If you want to put more and more things onto your trading plan, you're really taking yourself away from becoming a consistent trader. See, consistency is all about stripping away these things, because most of the things we're using Once again, take it from someone who's been there. Most of the things we've been taught really do not have any levels of consistency to them. Sure, every once in a while they will generate and produce a winner. But that's not a consistent method. A consistent method is something that has a two-step forward, one-step back approach. So if you want to get that two-step forward, one-step back approach, you have to simplify your trading. It cannot be complicated. Trust me. It's been my experience that the complicated ones are the ones that are the least valid. Those are the ones that have a couple of great winners and you feel like, oh my goodness, I'm gonna retire in a couple of months, and then you give everything back and then you're right back to where you started. That's not consistency. Consistent methods produce a couple of winners, have a loss here or there, then another couple of more winners, then another loss, and so forth. It's like a stair-step approach. And that's what will sustain you, okay? We're not afraid of having losers. So you have to simplify your trading. Don't feel that the more complicated you make it, the more valid it will be. It's actually the opposite. So with that stated, let's begin today's educational presentation. Now, just one thing I want to state before we begin. I know a lot of webinars like to take questions for each and every slide, but we don't want to do that because I have a ton of slides, over 100 to share with you today. If we do that, we'll be here far too long. So if you have a question, let's wait to the last 10 or 15 minutes, okay? Probably in the next half hour to 30 or 40 minutes. And then I promise I'll answer each question. The only question I will answer is the most complicated, or I should say not complicated, it is the most common one. And that is this being recorded? Yes, it is. We record all our webinars. So if you have to leave early, or if you can't see or hear the presentation, don't worry. We'll send each and every one of you a link to this webinar, okay? All right, so with that stated, let's begin today's presentation, and let's go over these two rules. Remember, I'm going to share with you two rules that make up some of the most consistent methods we trade here at Specialist Trading. And remember, they are rooted in simplicity. All right, rule number one. Regardless of what strategy you're trading, if you get a buy signal, it can only be entered above the 50-period moving average. All right? Simple enough, right? But trust me, most traders do the exact opposite. They get a buy signal, it goes up a little bit, and then straight down after that. Now, pretty soon, that nice trade they thought was a winner turned into a loser. Most likely, you go back and check, it's because your entry was below the 50-period moving average. Same thing applies to if you're going short. Let me show you what I mean here. This generic chart, someone could say, nothing happening here, Steve. We're actually in a sideways range once again. But if we add the 50-period moving average, we ask ourselves this question. Where is price in relation to that 50-period moving average? It's above. So that means we're only going to be viewing the market from a buyer's perspective. Okay? Doesn't matter if we have a sell-off. We don't care. We're going to look at that as a buying opportunity. Okay? Now remember, this is not a signal. This is not telling you to buy if price is above the 50. It's just giving you the mindset of whether you should be a buyer or a seller. This is telling you the overall trend is up, and we never want to trade against the overall trend. Now conversely, if sell signals are generated, we only want to enter that sell signal if it's generated and entered below the 50-period moving average. It's the same concept, just flipped upside down. For example, this could appear as a chart that's going nowhere once again, but if we apply the 50-period moving average, which we call our buy-sell line, we are below the 50. So what's this telling us? The market, not me, not the institutions, not some candlestick pattern, but the market is telling us that the overall trend is down. So you don't want to be a buyer if the overall trend is down. Now we automatically know what side of the fence to be on. We've just increased our odds for consistency tremendously by adding this simple tool. And if you don't believe me how powerful this is, go back and look at your last 10 or 20 trades. I can almost guarantee you that the reason why you had losses is because you were out of sync with this simple buy-sell line rule. You can start applying this once the presentation concludes today. All right, so that's rule number one. Rule number two, now that we know what side of the fence to be on, now that we know that whether we're a buyer or a seller, we look for this particular pattern. In other words, buy signal bars, whatever strategy we're using, must close in the top 25% of their range. Okay, so what exactly does that mean? Well, let's say your strategy is based off of news, okay? Let's say it's based off the tides of the ocean. It absolutely makes no difference. But when all the requirements are met, when everything comes together and you say, okay, I have a buy signal, that usually happens at the conclusion of a bar. If you're intraday trading, it could be at the conclusion of a 5-minute bar or a tick bar. If you're a swing trader, it could be at the conclusion of a weekly bar. It makes no difference, but that bar must close in the top 25% of its range. So, for example, if this is where all the rules are met on your particular system or your particular strategy, it must close in the top quarter, as we see right here. If you are above the 50-period moving average, your strategy or your system generates a buy signal and you close in the top 25%, the market wants to go higher on the short term. So this is a great edge to put in your favor. Conversely, as we see here, we are above the 50. We have two bars that close in the top 25. As you can see, this one went up a little bit for the next 5 bars, but for all we know, these were monthly bars. That could have been a nice gain. And this one closed in the top 25%, and look what happened here, okay? So you just are adding the odds in your favor by using these simple rules. Now let's look at the same thing if we're going short. Let's say your strategy, whatever it's based on, could be based off the full moon. When all the requirements come together, they usually happen at the end or close of a bar. Well, if that bar is in closing in the bottom 25% of its range, you have a high probability setup. For example, we see this bar here. If we close in the bottom 25, which we did, and we are below the 50-period moving average, the market is telling us it wants to go lower on the short term. This is a high probability edge to have in your favor. So as we look at this chart, once again, we're below the 50-period moving average or below the buy-sell line. So we know we're only going to sell short. We have rule number 2 here with a bar that closes in its bottom 25%. And look what happens, okay? These are tremendous edges coming from the market, not from what the institutions are doing, not from what some guy says on TV, but from the source, from what you're trading. The market is telling you it wants to go lower. So if you apply these 2 edges to your current trading plan, we strongly feel that you will increase your odds for consistency tremendously. Now, these 2 rules, which were taught to me some 4 decades ago, I use in everything I trade, just about all of my personal trading and any time frame, any market. Doesn't matter if I'm trading Bitcoin or if I'm trading futures. I use the same techniques regardless. Now, the reason is because these 2 rules make up the first strategy I was taught by my mentor some 4 decades ago. That was strategy number 4. This is our most consistent strategy to date. And the 2 rules are the first 2 rules of this strategy that I just shared with you. Let's talk about some of the highlights of this particular method. It was originally designed for traders looking to catch momentum. So originally we were in and out of this trade in a few bars because we were day traders. We're looking to catch a few points or so. But we've designed ways for you to be in this. If you decide to become a course member, you can stay in this trade for days, weeks, months if you like. Okay? It's a pattern recognition strategy. So I just gave you the first 2 rules. Then there are 3 more rules that need to be met. And one of them is looking and identifying a specific pattern that happens over and over again. The beauty of strategy number 4 is that it only uses 1 indicator. That's it. After we identify the indicator, which is the 50-period moving average, guess what? You already have that indicator. Then we look for that pattern and for the other rules to be met, okay? So let's look at the trading process because we've devised a process for you to learn how to trade this on your own. Remember, as I stated in the beginning, we want traders to trade for themselves. We're not here in the business to have you blindly come here and take whatever signals I post for you. We don't want to do that. Remember, the entire industry is based on that, and I think, in my opinion, that's why 85% of all traders fail. It's because you're taking yourself out of the game. I mean, think of any other endeavor, any other career. Would they take themselves out of the game and just blindly let someone else make decisions for them? But traders do this on a daily basis. You've got to make your own trading decisions based off the source, based off the chart in front of you, okay? And so this is how we make it simple for you. We put together and we developed Pro Trader Strategies, and I developed our platform, the PTS Primo Charting Platform, which actually automatically generates the strategy number 4 setups for you. Now you, in our course, learn how to identify them, but this is a way to back check to see if you're on the right road. For example, let me share with you the process. Remember, we looked at VLO originally, where some traders would say, well, Steve, this is a range market. You're not going to do anything, right? Not really, because this is what we teach our members in our courses. On our platform, the very first thing you do, regardless of which strategy, is to click on, in the upper green strategy tab right here, click on the buy-sell line, Remember, we shared with you the buy-sell line is simply the 50-period moving average. When this drop-down menu appears, you'll see we have 4 different ways to view it. Let's look at the most basic and simple, which is the 50-period moving average. And once you have that plotted, ask yourself, where is price in relation to the 50-period moving average? Okay, you may even want to write that down and post it on your screen. Where is price in relation to the 50-period moving average? Price is above. So are you going to be a seller? Absolutely not. That's why we call this the buy-sell line, because it automatically decides for you whether you're a buyer or a seller. We know now that we only have a buyer's mindset. We're only going to be looking at this market from a buyer's point of view. We're not even going to consider selling it. But someone could say, but Steve, there's a bearish engulfing pattern here. We don't care. There's no consistency in that. The trend is what makes you consistent. And the overall trend is up now. So we're not going to buck that. Okay? All right. Now, since we've become members of the strategy number 4 course, the second rule is to look for those bars that close in the top 25% of their range. All right. Now, we identify these 3 right here. 1, 2, 3. Now, the reason why we picked these 3 and not this one right here or not this one is because the other rules of the pattern need to be met. And so through learning the course rules, through studying the online course, we think that rule number 2 here, along with the next 3 rules, have all been met. And so these are all valid strategy number 4 buy setups. Even though nothing really has happened in the stock, these are all valid buy setups. So in order to check your work, this is why we generated the platform and made it simple. We developed this. The next thing you do is come up to the upper green strategy tab, click on strategy 4. The drop-down menu appears, and this is how you check your work to see if you're progressing. Click on signal arrow, and then the arrows automatically appear. And guess what? You were right. They're all valid buy signals. So now you're learning how to progress and how to make your own setups appear and whether they are valid or not valid. And then you can decide whether you want to take this. Now, it would have been a good choice, a wise choice, to take any one of these signals because VLO gained 17 points in 3 weeks. And people would say, well, how did you know it was going to go up? We didn't know. We didn't guess. We didn't predict. The market told us. But see, that's all we're listening to. We're listening to the market based on very simple but powerful techniques that have stood the test of time. Let's look at that other chart here in GIL. Remember, students would say, well, Steve, the institutions are all buying here. This is major Fibonacci and Elliott wave support. You've got to buy it. There's a bullish engulfing pattern right here. This is major, major support. We don't care about that. I traded support and resistance. I actually traded with the institutions when I was a specialist, and they didn't have any higher level of consistency than anyone else. They were entering orders in my book for stocks like Waste Management and IBM, and they were constantly canceling the orders or losing money. So why would I make a decision based on what they're doing? Okay? What we want to do is listen to the market. What's it telling us? The first thing we do is click on the buy-sell line. The drop-down menu appears. We click on 50-period moving average, and it's telling us that the overall trend is down. So I don't care what some institution is doing. I don't care what some guy says on TV. The overall trend is down. I'm going to have a seller's mindset. I'm not going to even consider buying anything until I have a couple of closes above that. But since we're still below, I'm going to look for sell setups. Now, rule number 2 says we look for bars that close in the bottom 25% of the range. And look, what do we have here? According to these 4 bars, they met all of the rules, the remaining rules of strategy number 4. Now, some of these bars closed in the bottom 25%. But remember, there's still 3 more rules to be met. And unfortunately, I can't divulge what those rules are because it wouldn't be fair to the people who are members of our course now. And say, Steve, why are you giving away all the rules for free? That's not fair. So I'm giving you 2, nearly half of them, but I can't give away all of them. So those aren't valid. They don't meet any of the requirements, but these 4 did. All right, so let's say you're learning the process. You want to check your work. Click on strategy 4 to see if you're correct. The drop-down menu appears. Click on signal arrows. And guess what? You're learning. So ultimately, what our goal is, we don't want you to have to go through this process anymore. We want you to look at a chart, regardless if you're using our platform or someone else's, and be able to properly identify a sell signal or a buy signal on your own because you've taken the course and you know how to do it. There's no reason to come back and find out what you're going to be trading the next day. There's no reason to rely on me. You can rely on yourself. This is how you become a consistent trader. And these were valid sell signals. They also would have generated a 12-point loss in the stock in 3 weeks. So potentially you could have captured 12 points. All right, so you know the process. Let's look at some recent strategy 4 signals, some strategy signals that happened in the last month or so. And later on in the presentation, I'll show you something that happened this last week. All right, here's a 7-point gain in Zion. As we can see, we had 2 signals generated. Now, someone could say, but Steve, we're below the 50-period moving average. Yes, but this closed above, and so did this one. So that's all that's required. And it met all the rules, and quick 7 points. Twitter, okay? Just a couple of weeks ago, a sell signal was generated. We're below the 50. We closed in the bottom 25%. Obviously, some bad news once again caused this to gap down 9 or 10 points, but we didn't know that. All we know is that the market was telling us, Twitter was telling us it wanted to go lower, the stock. How about SGEN, okay? This was in mid-October. We're above the 50 period, so even though it looks like the stock is going lower, we're looking at this as a buying opportunity. As it was coming lower, here's a bar that closes in the top 25%. It meets all the rules. So a buy signal was generated, and a week or so later, a 20-point potential gain. Now, we have a couple of sell signals generated in XLNX. This was in mid to coming into the end of September in early October. 2 sell signals are generated, closing in the bottom 25%. They're below the 50-period moving average, close in the bottom 25%, and ultimately the stock drifted down 15 points coming into the second week of October. You see how these simple rules are easy to apply. The first 2 rules you're seeing in almost every one of these examples. We're below the 50 here. We have 2 closes in the bottom 25%, and look what happens. See, the market tells us what it wants to do. There's no reason to overcomplicate your trading. How about Apple? Okay, this was at the very beginning of October. We had a cluster of 1, 2, 3 buy signals. The price was above the 50 period the entire time. Each one of these bars closed in the top 25%, and they met the remaining rules. And coming into this last week of October, potentially could have captured 25 points to the upside. Now, a lot of our students say, well, Steve, these are expensive stocks. I can't purchase them, maybe an odd lot, a couple of shares. Well, you could purchase, options if you'd like. In our course, we don't tell you what options to purchase, what the perfect, call or strike is. We don't, teach options, but we're just sharing and teaching you high probability entry points. How you decide to trade, whether the options or the actual stock, is entirely up to you. CRWD, price is below the 50. So are you going to be a buyer while this stock is rising? Absolutely not. You're looking for a selling opportunity. Let's say someone had bought here and said, well, Steve, your rules don't really work here because I made a nice little profit. Well, if you weren't quick in the next week, guess what? You would have given it all back. Remember, it's all about consistency. We're not saying that there aren't some really nice bounces below the 50 or some nice sell-offs above the 50. We're just trying to make you a consistent trader and share with you things that have stood the test of time. Remember, it's 2 steps forward, 1 step back. We don't want you to have a great trade and think, God, this works. I don't have to listen to that 50-period moving average rule anymore, and then give it all back. We want you to be a consistent trader because consistency is what equals longevity. And that's what will sustain you. Not some fly-by-night system that has a couple of good winners and then gives it all back. So as the market is rising, we're not concerned with it going up. We're waiting for it to generate a sell signal right here and take advantage of the 20-point potential we could have captured. How about TECD? Okay, this was in the first week in October. We had what we call here a cluster of buy signals, 2 signals right next to each other. They're both above the 50, and at the same time, they close in the top 25%. 25 points coming into the last week of October, okay? Using the same 2 rules I just taught you moments ago. Let's look at SERV. Now, I purposely posted this to show you what we mean by consistency. Remember, I said that 2 step forward, 1 step back approach. The first buy signal in SERV is a valid buy signal. It meets all the rules above the 50 period and closed in the top 25%. But nothing really happened. It kind of went sideways. And if you used one of our standard stop placements, you most likely would have got stopped out with a 3-point loss, okay? This is what we mean by consistency, though. Most traders, they take a loss, they go in the corner, and they want to sulk, they want to lick their wounds and say, boy, this stuff doesn't work. This guy, Steve Primo in specialist trading, this stuff is just like all the rest. It doesn't work. You have to get back on the horse because the very next signal generated was a sell signal. Even though it's above the 50, look where the close is, right below, 1 or 2 ticks below the 50. It's a valid sell signal. You could have made back that 3 points and potentially captured another 11 or 12 on the way down, okay? This is what we mean by consistency. You can't just think that you never lose. That's okay. You just want to keep your losses to a minimum and then get back on board. Here's an example in MRTX, another cluster of sell signals. This is a high probability setup when you get this cluster of 3. 3 sell signals in a row. Nothing much happened until ultimately it fell out of bed. 20 potential points coming into the beginning of October. KLAC, I want to show you this for a purpose. I'm going to show you a higher time frame chart going forward, but this is just showing you how this process works, how simple it is to take advantage of being above the 50 and then taking advantage of these signals as they appear. Had you taken this very first buy signal, a couple of buy signals here in July, you could have potentially captured 52 points. Or it's up to you. Remember, we don't tell you how to trade, but we teach you different ways. We have upwards of 6 or 7 different exit points and entry points and stop placements. So let's say you're the type of trader that just wanted to get out with a quick profit. Okay, you could have maybe taken 5 or so points here, gotten into the next one, taken a couple more points, and so on. It's up to you. Or you could have taken the very first one and just held on. There's nothing wrong with either one. What's only wrong is when you let someone tell you how to trade. We're not telling anyone how to trade. We're just teaching you all these different aspects of trading that have stood the test of time. It's up to you to decide which one you want to apply. MDB, another example in consistency. The first sell signal, had you taken one of our generic sell stop sells, you actually would have seen that you would have been stopped out here. So that's a 10-point loss. Once again, you got to get back on your horse because the very next sell signal generated potentially could have captured 25 points. So you would have been able to make back that loss and then potentially captured another 15 points. Here's a cluster in VRSN, 1, 2, 3 sell signals that potentially captured 28 points. If you missed those 3 at the top, another sell signal was generated here coming into October. Tesla, okay, we had 2 buy signals coming into October and nothing really was happening. The stock was just going sideways. A lot of traders say, well, you know, should I hold on to this? Well, it would have been a good idea because look what happened to Tesla, up 90 points coming into this last week here in October. And then beyond, lastly beyond here, we have another cluster here right at the top. As we were having a nice bounce here, this is where most students would say, Steve, can't I buy this? It's going higher. Remember, we're not concerned with these rallies. We're only concerned with the selling opportunities below the 50, and that's why we don't want to go long, because if you hold on too long, you'll give back everything. So it's much easier just to be in sync with the overall trend. Potentially, you could have captured 70 points to the downside. Now, let's look at some other time frames and some other markets, because I don't want you to think that this only works with daily bars of stocks. Let's look at some other time frames of stocks, and then let's look at some other markets as well. Now, remember we looked at KLAC. Well, let's look at the weekly chart of KLAC. Let's go all the way back to July of this past year. Look at the little sell-off we had. Well, not little, actually. These are weekly time frame, weekly bars. So this actually was a fairly strong sell-off, where most traders would say this stock has broken down. Okay, this is basically something you don't want to touch, and I would sell all my shares here on this little bounce. Excuse me, because this is a clear-cut breakdown here. Well, remember, let the market tell us what it wants to do. First thing we do, even though we're looking at a weekly chart now, is the same process. Click on the buy-sell line, click on the 50 period, and what is the market telling us? Even though we had 2 closes below, the very next bar closed up above. We need at least 3 to 5 bars closing below or above to tell us what the trend is. So even though we had 2 closes, they're really negated. We're still, for all intents and purposes, above the 50 period. So the overall trend is up. This is not something you should sell yet. And on top of that, we have this bar that closed in the top 25%. It met all of the remaining requirements of strategy 4. So you want to check your work just to make sure you're spotting and identifying it correctly. Click on strategy 4, click on signal arrows, and you're right. That's a valid buy signal. So in June of this past year, a buy signal was generated on the weekly charts of KLAC. Had you taken advantage of that, 62 points coming into this midweek of October, okay? Not a bad signal, right? If you're a swing trader or a longer time frame trader. Now, it doesn't mean you had to stay in or you would have made 62 points. I'm not saying that. Some traders would have taken maybe 10 points and saying, wow, nice profit, I'm getting out. It's entirely up to you. Remember, you're in charge of your trading, not us or no one else in any other webinar or no one on TV or not even some institution. You are in charge of making your decisions. What we provide are clear-cut ways for you to decide how to exit, how to enter, and how to place your stop. Here's a monthly chart of our RC. The same process happens. We're below the 50 on monthly time frame. Look at all the sell signals that were generated. Now, let's say you were long this stock and you're looking for points to get out. Well, in your long-term portfolio, you could have used these sells as not as points to short the stock, but just points to get out, because you had a number of warnings coming from the market telling you to get out of this stock. Let's look at a 4-hour chart of the Australian dollar for all you currency pair traders here, okay? As we see here, we're originally above the 50, and then we had consecutive closes below. So what is this telling us? It's telling us that the overall trend is down. But look what happens here. We have one close above, and it meets all the requirements for a valid strategy number 4 buy signal. Now, this is a more advanced way of trading. The more conservative traders would say, I wait for 3 to 5 bars to close above. But if you're a more advanced trader, more aggressive, you could have taken this valid signal and potentially captured 130 pips in the next week. Okay, that's roughly about $1,300 per contract. Now, what if you're an intraday trader of the E-mini futures like myself? I mainly trade the E-mini futures. Here's an hour chart of the E-mini futures going back to the 1st of October. We have a very strong downtrend. Someone looking back in hindsight would say, well, sure, Steve, anyone can tell you of this chart you don't want to be a buyer, but how would I have known that in advance? Well, there's no way to guarantee that you're going to know that, but one way to help you is to use the process that we teach on our platform. Click on the buy-sell line, click on 50-period moving average, and guess what? You would have known right here not to be a buyer. So you would have been able to sidestep all of this. Now, unfortunately, what most traders do is they'll say, well, look, this is major support here. We're stopping, so I want to buy. And this is where they buy, and then it goes lower. And then they'll say, boy, now it's really going lower. Okay, so I'll short again, and then it goes lower. But if you're below the 50, you only want to have a seller's mindset. Now, here's another aggressive point of view here, because we have the first bar that closed below, closed in the bottom 25%. It met all the rules. And so let's check our work. Click on signal arrows, and guess what? It's a valid sell signal. So you could have potentially sold this if you were an aggressive trader. If you missed that, you could have sold this one down here. But in 2 days, you could have potentially captured 100 points. That's roughly $5,000 per contract. Okay? Remember, we're not saying you could have. Some traders take 1 or 2 points and say thank you and they get out. Other traders try staying as long as possible. It's entirely up to you. All right, so let's recap what we taught you today. Remember, always use our buy-sell line. This is what I've said before in many webinars. If I were stranded on a desert island and I could only trade with one of the tools I was taught by my mentors, it would be the buy-sell line. And what is the buy-sell line? It's the 50-period moving average. That's all it is. Now, once you've established if you're a buyer or a seller, if price is above or below, you look for that top-bottom 25% feature. That's where a bar closes in the bottom or the top of its 25% level of its range. That will tell you where the market wants to go. Now, these are 2 rules that make up one of our most consistent strategies. Strategy number 4. It's a strategy that I continue to use on a daily basis in my own personal trading. This is the first strategy I was taught some 42 years ago, and I continue to use it today. Now, to make things simpler to teach you, because I was lucky to have my mentors on the floor who were standing by my side, sharing with me and teaching me how to apply this process. But since I can't virtually go to each and every one of your homes and teach you how to do this, Pro Trader Strategies and I devised a way in which to do this. It's through our platform, the PTS Primo Charting Platform. This is the platform that actually teaches you the process of trading strategy number 4. Now, ask yourself, do you think this strategy could have helped your trading this past year? We only have a couple of months left. Do you think this strategy can help you going forward into 2020? We have a great offer for all the attendees today. We have a great discount. It's our strategy number 4 special, okay? Now here you see stock strategy number 4, when we first released this, when we first started this some 8 years ago, it was particularly a stock strategy because we mainly were gearing it toward stock traders because that was the way I was taught. But over the years, being associated with Pro Trader Strategy, students have told us that this works on anything. It works on the E-mini, it works on futures, currency pairs, commodities, Bitcoin. So it actually makes no difference. So don't get fooled by the stock strategy title. If you're a currency pair trader, you've just seen it can work just as well. Now you get instant course access, detailed instruction. You'll learn all the different variables for entries, for exits, and for stop placement. You get the automatic buy and sell arrows, the complete course rules, and included with this, you'll get educational correspondence from yours truly. But we're not going to stop there. We're going to also throw in 12 months of the PTS Primo Charting Platform so that you can go through that process of learning how to trade strategy number 4. Now, unfortunately, 12 months is going to cost you close to $1,000. But guess what? We're totally dropping that price. In fact, we're going to throw in 12 months absolutely free. We're not going to charge you for a full year of the platform. And we're not just going to give you strategy number 4. Here's what's included. Obviously, you get the up and down arrows for strategy number 4. You'll get the feature buy-sell line, the 4 different features on how to apply it. You get our proprietary exit levels. These are exit levels that are automatically generated on the platform. Over 90 of the most prominent technical indicators to experiment with. But here is what I think is the most valuable thing on our platform. Our signal scanner. I love this signal scanner. I use it on a daily basis because it scans literally hundreds, if not thousands of issues for me at just in a matter of minutes where I can see where a strategy number 4 setup is taking place. For example, this is how simple it is. Remember we shared with you the strategy 4 where you would click on the signal arrows? All you have to do is now, instead of clicking that on, click on scanner and this page appears. All you have to do is now click on load symbols and then a list is provided of any of the symbols for currency pairs, stocks, let's see, indices. That could be the S&P 500, the NASDAQ, the Dow, the DAX, European indices, Canadian indices. It can be Bitcoin, currency pairs, anything you can think of, futures. Whatever one you decide to choose automatically is shown in a matter of seconds. Then you just click on scan. And you'll see a series of green and red horizontal bars. The green bars mean that that's a buy signal in the corresponding market you're looking at. The red ones mean, obviously, a sell signal. Now, let's say you were a member of our course a couple of weeks ago, maybe at the beginning of October. You went through a scan and you saw this. On the night of October 4th, a buy signal was generated using strategy number 4. All right. Well, you look at the chart and you say, well, it's above the 50. Yeah, we're closing in the top 25%. It meets all the rules. And, I didn't have to scan through and look through a million charts, digitally. It just happened in a matter of seconds. So let's say you decided to go long AXE. Well, the stock jumped 15 points coming into yesterday. Now, obviously, some news came out yesterday which caused it to jump up like that. We had no idea, and someone would say, well, how did you know to buy this, weeks in advance? Well, because it was told to us by the market, by the actual chart. Once you learn this pattern, you see it over and over again, and it's a very high probability setup. Now, that happened on the 4th, about 3 weeks ago. This happened last week. On the 22nd, you could have scanned and seen that Grubhub generated a sell signal on the 22nd, which was last week, last Tuesday, I believe. We're below the 50. We close in the bottom 25%. You have taken the course and you say, yeah, it's a valid setup. I can recognize it myself. Maybe you bought the puts, but either way, a week later, the stock dropped 25 points in 5 days, okay? News came out, bad earnings. People would say, well, so do you guys follow the earnings? Is that part of the strategy number 4 course? No, I stopped looking at earnings 42 years ago. I stopped looking at that stuff. Trust me, that was one of the things I was taught when I was first taught as a trader. You must know the earnings estimates. You must know that and know what are good earnings and bad earnings. That's what a successful trader does. Well, I did that for about a year, and I almost was fired because nothing was working. Sometimes it would be a great estimate and the stock would go straight down. Other times it would be a terrible estimate and the stock would go straight up. There was no consistency in using that. So my mentors, once again, said, Steve, don't overcomplicate your trading by using things that really show no consistency. They don't work. Once I let go of that and stopped looking at earnings and estimates and jobless claims, that's when my trading started to become consistent. So you're free to trade that way if you like, but it is in no way required to look at any earnings or jobless claims or requirements for fundamental news. It's just not required. I stopped looking at them 42 years ago and I'm still here. So if it works for me, it should be able to work for you. So Grub dropped 25 points on some bad earnings reports. Guess what? We had a sell signal generated by the market and this pattern 5 days before that earnings report came out. And even if you didn't use strategy number 4, look at the 50-period moving average. It was telling you in advance that the overall trend is down. Sure, we had one close above, but quickly went right back down below again. So this is all included along with Bloomberg TV. You have free Bloomberg for a limited time on the platform where if you need to look at fundamental news, you can, and personalized tech support. If there's ever an issue where you can't load up a chart or get a video because it comes with tutorial videos as well, we will have our personalized tech support there in a matter of minutes to resolve the issues for you. This is a great, great offer. Our strategy number 4 special plus 12 months of the PTS Primo Charting Platform. Now, normally, this would, without the discount today, it would cost you close to $1,700. We're not going to do that today because of our end of year special. We're only going to charge you a total of $695. Remember, this includes 12 months of the platform so that you can learn all these things. Now, I'm not saying and guaranteeing this, but don't you think off the examples I shared with you for this last month, you could have at least had some winners using some of those? Remember, it's your decision. We're not telling you how to trade or telling you what to trade. But look at all of the winning examples I just shared with you in October. Even some losing examples as well, how you could have made that back and made some more on top of that. So $695 is a very inexpensive price to pay for a strategy that just generated a ton of winners in the past 30 days. Here's how to take advantage of this. If you want to become a student of mine, contact Pro Trader Strategies. If you have more questions concerning the platform or concerning price, I would suggest calling them at area code 310-598-6677. There's absolutely no obligation. They would be more than happy to answer any question concerning price. A lot of students like to set up payment plans. I'm sure they'd be willing to work with you for a small deposit. They would be more than willing to have you up and running, and you can make payment plans to pay that $695 in full, okay? Now, the link you see at the bottom will take you to the sign-up page. It's not a live link, but we have just posted a live link in the chat box. You see right there, it's in your chat box. If you click that on, it will take you to the sign-up page, and there's more information there, okay? Now, feel free to write in any questions in your question and answer box right now because I promised I would answer the questions. We have about 10 more minutes left before we conclude. And if you have a question concerning anything I went over or anything to clarify about the discount or about the price of the platform, if you want another strategy or something concerning that, I would be more than happy to answer that right now, okay? Let's say I open up the question and answer box. Bill asks, does the strategy work for day trading futures or short-term time frames? And then he's completely said, never mind, thank you, got it. You must have asked the question prior to that. Yes, Bill, as you can see, and I personally use it on intraday trading. In fact, I use strategy 4 on intraday trading every day. So, and I scan, here's another thing I forgot to mention. I scan on hourly as well as half-hour time frames. You can do that as well. So what I do a lot of times is if I'm looking at the complete strategy for the S&P 500, I'll look through the entire strategy scan of the strategy S&P 500 to see strategy 4 setups. And in a matter of a couple of minutes, I'll see what the setups are. And so it's a great, great tool going through indices, or if you want to go through the futures, or if you want to go through the currency pairs. It makes no difference what time frame and which direction, okay? Someone is saying, can we trade off of your platform? No, we don't have access. We're not a brokerage firm. We're strictly an educational company, as I stated in the opening. So what traders do, myself included, is you have a couple of platforms that you toggle back and forth on. Let's say you use Metastock to enter your trades, or MT4, okay? What you'll do is have on one screen your platform and on another screen your trading platform to enter the orders. And just toggle back and forth. You use our educational platform to get the signals or to look over, and then you'll enter it on the other platform. It's that simple. I do that every day. And so it's okay to keep your current platform if you want. And even if you have that current platform, we furnish you with all of the signals. If you want to keep everything on that platform, We'll also give you the add-ons for, let's say, Metastock, MT4, TradeStation, NinjaTrader, Thinkorswim, Sierra charts, so you can get the up and down arrows as well. The only thing you won't get is that process that we have on the platform. That's the learning process. You'll have to go through that on your own platform, okay? Any other questions? Does this work on Bitcoin? Yes, it does. Bitcoin seems to go in these mood swings from very volatile to very quiet. But when it does have these really nice swings, some tremendous strategy force signals are generated. So yes, it works on any market, any time frame. We have traders trading this on commodities. That's how versatile it is. So it's a great way to trade, and it works on any market. Now, as we conclude here, this is, as I stated, a strategy that I use on a daily basis in my own personal trading. As soon as we conclude here, I'm going to go back and look for any setups on my own personal trading. So trust me, I use this on a daily basis. I wouldn't be talking about it if I didn't use it. It's a great way to get your trading back in gear to conclude the end of 2019 and to get started in the right direction in 2020. If you've been frustrated, if your trading has just not produced the type of results you want, come on board with us, become a student of mine, and get on board with Strategy Number 4 course. We have a great offer, 12 months, along with a great discounted price of the strategy, less than $700. We really feel strongly it'll get your trading in the right direction, okay? Remember, if you have any more questions, contact Pro Trader Strategies at 310-598-6677. As we conclude and take one last look at our disclaimer, I just want to say thank you so much for taking time out of your Wednesday to join us. I hope you learned something from the first 2 rules. Remember, you can apply those to any method, any strategy. We really feel strongly that they'll take your current method and give it a boost of consistency. But in order to get that highest level, come on board with us and become a student of mine in the Strategy Number 4 course. Thank you so much for attending today. I'll see you next time. Bye-bye.